Hello, everyone. Welcome to today's live stream. We're going to be talking about uh, decentralized derivatives protocols on BSC. We've seen recently a number of the decentralized derivatives protocols, such as DYDX, achieve very significant user growth. Definitely, decentralized derivatives protocols form a critical DeFi primitive in the decentralized finance stack. We've got three great projects joining us today, uh, real innovators in the decentralized derivative space. Um, and we're going to have the opportunity to learn about their projects as well as upcoming developments and the roadmaps, as well as an opportunity for the audience to share questions and receive answers from them. So first up, we'll be joined by uh, Dairy Protocol. Um, Hi, Janice.
Hello,
Welcome. How are you?
hello, Sammy. Thanks, I'm good.
Great to have you
Hello,
here.
everyone.
Um, Janice, we'd love to have an intro from you to learn a little bit more about yourself, and then a sharing about Dairy Protocol. I know that Dairy is up to a lot at the moment. We're very keen to learn more about that.
Sure, glad to be here to share our project. Let me share my screen. Can you see my screen now?
Yes, we can.
Okay, hello, everyone. This is Janice from Dairy Protocol. I take care of Dairy Protocol's operation and glad to be here to share our project. Our project is called Dairy Protocol, in which dairy is a short for derivatives. We'd like to describe dairy in the formula which you can see in the screen. That is perpetual futures plus everlasting options times decentralized, which actually refers to the two major products we Dairy Protocol is providing now. First is perpetual futures, and the second one is the everlasting options. And obviously, we provide these in a decentralized way, the DeFi way. Kind Pancake does for spot trade. Here we are dealing with derivatives. Okay, now let's dive into the first ever everlasting options. This is the pretty new one we've supported from September 1st. Comparing to the classic options in both DeFi and CeFi space, the most important features of Dairy's everlasting option is when you trade everlasting options, there's no need to roll. This is not the case when you trade classic options. If you want to keep your position across the expiration, you always need to roll before it expired. But for everlasting options, because it is everlasting, you don't need to roll it as long as you paid the funding fee to maintain your position. And because of the same reason, the expired dimension based options are removed. All the different dimensions are consolidated into a single one, that is, and consequently, then there's no liquidity fragmentation for that. Okay, that's the two major features for dairy everlasting options. And we implemented this everlasting option in an AMM way, especially we adopt PMM, which we called DPMM, short for Dairy Proactive Market Maker. On the screen, and you can see the actual trading use interface for the everlasting options. Now you can see we have BTC and ETH everlasting options. And there is everlasting option is the first ever everlasting options, not just the first in DeFi world. It is the very first everlasting options in the whole financial world, including the traditional finance. Even this is a very new one. We believe there's really a huge market potential as we launched this daily everlasting options on September 1st. In a little bit less than 1 month, the total trading volume has surpassed 100 million. Please be aware that this is even in the stage that community users are still learning this really new stuff. Okay, now we've put a very simple comparison about the everlasting options provided by us and some other DeFi projects such as Open, Hedge, and Hedge. And you can see Open and Hedge are built on Ethereum, while Dairy and Hedge are on Binance Smart Chain. As a comparison, we also list out here the Deribit, one of the biggest traditional centralized exchange of options. I'm not gonna to the deep detail of the comparison, but if you are interested in the detailed information or the detailed comparison, you are welcome to visit our Twitter, and you can find all the information on our Twitter channel. Okay. Next, as I have just mentioned, we have two major products. One is everlasting option, the other is perpetual futures. And now let's move on to the perpetual futures part. For the perpetual futures, we divide it into 3 zones. First one is the main zone, which is to trade perpetual futures of the top mainstream cryptocurrencies like Bitcoin, Ethereum, and BNB. And you can see these symbols in the screenshot circled out here. And the question comes, what's special of Darius perpetual futures? For the main zone, it supports dynamic mixed margin, dynamic liquidity providing. But what does that mean? It means we Dairy Protocol's perpetual futures support several kinds of base tokens. Currently, we have already supported the BUSD, BNB, and Cake. You can see the supported base tokens as circled out in the screenshot. And in the future, of course, we are going to support more. For traders, you can choose any one of them or several of them to either deposit as margin to do your tradings or deposit the base tokens to provide liquidity. Okay, just as I mentioned, there are 3 trading symbols in the main zone: Bitcoin, Ethereum, and BNB. They actually share the same piece of liquidity. That is, we called multiple trading symbols in one pool. Okay, with all these features consolidated, Darius perpetual futures actually achieve the extreme capital efficiency. Our capital efficiency that is even better than most of the centralized exchanges of derivatives. As we also have this so-called inner zoom. Now you can see from the screenshot, inner zone is for us. Inner zone is a space to experiment the new trading symbols, basically, it is to track all hot spots which are actually hot on the spot market space. Now you can see in the screenshot, we have AGLD, MBX, XX, and so on and on. Besides the main zone and the inner zone, we also have the open zone, which is our derivatives permissionless market. Just like Pancake for spot trading, where you can add and define your own trading pairs. On Dairy Protocol's open zone, you can launch your own trading pool to trade whatever trading symbols or define any base tokens, as long as there's an Oracle support which can support the price feed. Okay, you can see in the screen now we have several self-defined derivative trading pools now. Also here we've put a simple comparison here between Dairy Protocol and other derivatives products such as DeFi DEX, which is really hot recently, and injective, perpetual protocols, hedge, and synthetics. Besides, we also list out a centralized exchange. Okay, here is BMax. Same as the everlasting options, I'm not going to the very details. If you are interested, please go to our Twitter channel to see the details for more informations. Okay. Here's our roadmap. Right now, we've provided two major products, that's perpetual futures and everlasting options. And the focus in Q4 and the upcoming year for us is more on the operation side to ensure we're not gonna make dairy. Okay, we're not gonna make Dairy Protocol the go-to place or the go-to market for perpetual futures and options trading, meaning when people want to trade perpetual futures or they want to trade options, they just go to Dairy Protocol directly. That's really on top of our priority. Okay, but we also will keep try to keep rolling out new stuffs. We will keep our innovations on financial product side. Actually, we are work internally and cooperate with outside reaches to come up with all kinds of new products. Just like this new everlasting options we've rolled out in Q3, yeah. And in the futures, meanwhile, in the futures, we will see other financial products that's also will be the very first in the financial history. So stay tuned for our new products. And also, we are going to experiment a lot of trading symbols, just like what we have done in the Zone. We're going to work with all the top GameFi projects on Binance Smart Chain. From our side, from their side, we're not gonna to list their tokenized trading symbols, and from their side, they are gonna work with us to see how to introduce their derivative trading module into their gaming scenarios. Okay, these are all the things we're not going to do in the Q4 and the coming year. Okay, that's it. That's Dairy Protocol. you can go to our website, dairy.finance, to trade or to provide liquidity. And you can also go to our Twitter and follow us and our GitHub for the open source code. But the important is recently we are going to launch a trade to earn competition, which is the Dairy Protocols trade mining program. Please follow us on the Twitter channel and stay tuned. Okay, thanks, Sammy. That's it.
Thanks a lot, Janice. That's really amazing, fascinating. Uh, a lot of innovative work happening in Dairy Protocol. And we also saw recently very significant growth happening in the everlasting options, which for sure shows the high level of user interest and utility for the community. Couple of questions here. Could you share more information and insights about the security of the Dairy Protocol, about the security audits that have been done, and other relevant information?
Oh, sure. Security first in Dairy Protocol. We actually, as we have two major products, everlasting options and the perpetual futures, we've actually got audit several times. And you can see, users can find our audit reports on the website in the submenu of docs, which called audit. So feel free to just go there and you can check out our audit reports. They are carried out by PackShield and some others are by Certic. Okay, besides the audit, we we are also doing bug bounty with in Unify on Binance Smart Chain, and internally we also have done a lot of work on security dimension. Yeah, thanks.
That's really awesome. The open zone is very interesting. Could you share with us what the steps are for users to create markets in the open zone?
It's really easy for users to create their own derivatives trading pool. Just follow the guide. Sorry, I can share my slides back to. Can you see my screen?
I can, yes.
And the perpetual futures you can see in the screenshot in the pools and under the submenu OpenZoo, just click the add and follow the guide provided by our user interface, and then it's really easy to create your own OpenZoo. Yeah. But
That's
but
awesome.
but the main the but the one thing just to remind that is if you want to define your open zone, that you need to make sure that you have an oracle to provide the price fee. Yeah.
Got it. Uh, Thanks a lot, Janice. One more question here was, uh, what do you hope to see next for the decentralized and DeFi revolution?
Okay, good question, but it's a huge question. um, we have defined summer in 2020. However, most of the DeFi projects in the DeFi summer belong to the easy part of finance. That is, they do not really deal with the complicated risks. As the DeFi movement continues to advance, the decentralized revolution will sweep the entire financial world. I mean, that is, DeFi has to okay. DeFi will tackle the sophisticated part of finance. That is, you have to dance with risk. But the most important tool invented by the financial industry to deal with risky financial derivatives. In the future, with more elite teams such as us, MCDEX, kind projects, we will we are gather in the DeFi world and grow widely on the new mainland DeFi derivatives. And also we believe that um, there will be a huge market potential for the DeFi derivatives, and hope and think this will lead us, all of us, to a new financial world. And uh, mm, yeah, yes, that's it.
Awesome. Yeah, definitely. I think the increasing maturity of the DeFi derivatives space is going to be a really critical component for growing the next stage of liquidity and growth in the whole DeFi ecosystem.
Yeah,
Uh,
sure, of course.
Last question here was, could you share more insights about what was the thought process and factors that drove the decision making to build Dairy Protocol on Binance Smart Chain?
um, why Binance Smart Chain? Yeah, first, the BS ecosystem, I think is the which provide best support for the applications. BSC running comprehensive support to boost DeFi projects like us, like their protocols. This is the first reason. And secondly, there are many promising DeFi projects on Binance Smart Chain, and as part of DeFi Lego, we actively engaged with many other various DeFi projects on or GameFi projects or other NFT projects on BSC to offer the DeFi way to trade derivatives to the BSC community. Yes, we can work together to make the Dairy protocol, make the BSC the first choice, the derivative trading chain for all communities. And and last but not least, Binance Smart Chain. Binance Smart Chain's active community is really it's really supportive, and we really welcome their participation in growing the DeFi protocol, Dairy protocol ecosystem. Yeah, that's the three major reasons why we decide to build Binance Smart Chain. Yes,
That's
that's
awesome,
it.
Janice. Thank you so much for this really amazing sharing and for joining us today.
Thanks, Sammy. Thanks, everyone. Feel free to follow us on Twitter. Thanks.
Yes, definitely recommend all the audience to go and check out Dairy Protocol and follow the social media properties and Twitter. Thanks again, Janice.
Thanks.
So next up, we're going to be joined by Gene from MCDEX. Hey, Gene, how are you?
Hey Sammy, I'm doing great. Thanks for
Great
having
to
me.
have you with us. Our pleasure. Great to have you with us. We'd love to start off by hearing a little bit of introduction about yourself, and love to hear more about MCDEX and all the great things that MCDEX team is working on.
Yeah, for sure. So my name is Jean, and I'm the co-founder of MCDEX, and I'm basically taking care of the marketing and operation side. So MCDEX has been actually being a while in the space that we have been continuously like building and shipping, and right now we just launched our V3, which I will like have more elaborations about like what's the key features and some updates from my side. And can you see my screen now?
Yeah, we can see it.
Great. So, like I mentioned, that MCDEX has just launched our version 3. So September the 1st, we launched the version 3 first on Arbitrum. And in the late September, we just deployed on the BSC. And so for short, we are trying to build the decentralized BMax. And we are calling ourselves the permissionless perpetual swap that is powered by our capital efficient AMM. So there are basically three key features of our V3. The first one is the capital efficiency. So actually the AMM has a problem of the capital efficiency for a long time, and we have been working continuously to improve it. So our V3 AMM, it has about 1,000 times better capital efficiency comparing to the Uniswap V2, which is a constant product formula. So this is to solve the liquidity issue, which we believe is the key problem or the key pain point for the DEX for now. And I will elaborate more detail later for how we achieve this capital efficiency. And the second feature of our protocol is the first permissionless perpetual swaps in the space. We actually have been working on this also for a while, since our V2. So we believe that for DEX, one key thing is to have the market diversification, just like Uniswap V2, which is quite hot since last summer. And that is mostly because the amplify, which is listed or which is active on the Uniswap V3, but not yet on any central exchanges yet. So that is basically the why Uniswap back in last summer suddenly boom. So we believe that for the DEX, the long tail market or the market diversification, especially in the initial stage, is quite important. So that's the arranging of our idea why we designed this in a fully permissionless way, which means that anyone can create any perpetual market in the space. And the third thing that I want to highlight is about highly composable. That is achieved by two features. One is that because we are fully powered by an on-chain AMM. And the second thing is that we are deploying on the chains that has the ability to be composable, for example, the Arbitrum and BSC. So this is kind of a way that enable other smart contract can build on top of our smart contract so that we can widen the participants of the end users. For example, there is a project called Lima Finance, which will launch very shortly, I think next week. And Lima Finance is a yield protocol that can have the users to earn yield via ETH or USDC through the basis trading. So they build their basis trading strategies based on our protocol. So this is one example of how other smart contracts can build on top of us and can kindly widen the end users and furthermore widen the potentials of the protocol. Yeah. So then I would like to elaborate a little bit more about how our V3 AMM works. So actually the methodology of our V3 AMM is quite similar to the Uniswap V3 AMM, which is that we concentrate much more liquidity around the index. So as you can see in this picture, and as I mentioned, that it was 1,000 times better capital efficiency compared to the constant product AMM. If we take a look at the Uniswap V3, as we can see, there is a small table here that which we have doing some tests in the real environment, that if there are both of the Uniswap V3 and MCDEX V3 have the TVL of the same amount. For example, it's like $280 million in our AMM. You can see the difference within the around the spread. So from 0 to 10 BPS, on Uniswap V3 there will be 10 ETH, but on our V3 there will be like more than 6,000 ETH within the 10 BPS. And if we take a look at the 50 BPS, and we are still about like 50 times more liquidity around the index. So this is to give you guys like clear picture of how it is like much better capital efficient. Yeah, so this is like how our AMM works. And for the competitor landscape, we all know that like right now the DYDX is in a very high traction, and as well as a perpetual protocol. So we just like have like a comparison here that in terms of the decentralization, composability, permissionless, we are actually comparing to the perpetual protocol V1 here, because their V2 like is not like yet, so we don't have so much information. So this is like a clear comparison here in terms both of the product and the tokenomics, and also the community side. And there's like some like thing I want to mention is the featured media that we all know, like some very renowned media like Delphi and Missouri has been like also mentioned MCDEX for several times, and kind of benchmark us against like the DYDX and perpetual. And one thing to mention is that Delphi is our investor that have been helping a lot, doing some like research articles, and also help us spreading the word, especially in the Western community. And yeah, more statistics about like after the V3 mainnet. This deck is actually made in the late December, which during that time we are still not on BSC yet. Actually, the figure, the data has been much larger than issuance by now. So this data is only on the Arbitrum. It's on the Arbitrum. So I will just skip it. So right now, like on BSC, we in the last 24 hours, our trading volume has already passed $100 million, and the TVL for now is about like $40 million. Actually, the trading volume we have just break the average high for now. We're really excited. And more about what happened in the future. So we just launched on BSC, and we have enabled a massive trading mining program, which I will elaborate a bit more details in the later. And in the rest of the year, our main strategy is to expand to more other chains, to, for example, the Avalanche. And also another priority will be launch some ecosystem project like Lima and Agro that can kind of boom the whole MCDEX ecosystem. And for MCDEX V4, which will be launched next year, that will have several new features that we haven't realized yet, which include the multi-collateral, cross margin, and position tokenization to further improve the liquidity of our AMM, and also to improve the composability. So finally, this is like the trading mining program that I just mentioned, which is quite massive. That we are like several key features here that actually the trading mining program is kind of similar to the current DYDX one, but one thing different is that we actually highlight, or we add one more criteria, which is staking. So we have like 3 criteria here. The first one is the fee paid by the users. And the second criteria is the open interest held by the traders, and the third one is the MCB staked by the holders. So we are trying to use this trading mining program to attract more traders, then which will improve our trading volume and open interest, and will then improve the APY of the AMM, and then more LP will come because of the high yield, which is improved. Furthermore, will decrease the trading costs, kind of creating the positive loop here. And one more slide is about the MCB token, that we have like about 10 million total supply and 2.2 million. So right now, the main utility of MCB is a governance token that they can vote on the how to use assets in the MCDEX treasury. And MCDEX treasury is capturing the value created by the protocol, mainly from the transaction fee. So right now, like MCB is more like a governance token, but like later we will like working on improving the some more utilities. For example, the buyback, the MCB in the secondary market use the assets in the DAO treasury. And one more slide, which is might be the last slide, is like some more information about like the previous investment. We have 2 rounds. The seed round is from some individuals, which include Arthur from DeFi Capital, and Chao Wang from DeFi Alliance, and Robert Leshner from the Robot, and Derry Lau. And back in April this year, we have like a Series A, $7 million, which includes $6 million from the investor and $1 million from the community. And the investors include leading investors are Delphi Digital, as I mentioned, and Alimenta Research. And other participants are the Multicoin, DeFi Capital, Fenbushi, and IOSG, DeFi Alliance, and other individual investors like Melton. So I guess that's all from my side. Sorry, I might be speaking too much, and I may take some questions from here. Thanks.
That's really great. Really fascinating stuff, Jean. Couple of questions here. So you touched upon previously about that there is a lot of decentralized derivatives protocols in the market at the moment. Could you share some more information about the key differentiators for MCDEX compared to other decentralized perpetual swaps protocols?
Yeah, sure. Actually, I have touched upon a little bit during my presentation. Basically, there are 2 key things that I think can differentiate us. The first one is the liquidity. We deeply believe that the liquidity is the key issue and the first principle for the DEX. So that's why we have been spending a lot of time and a lot of resources to do some innovations on our AMM so that it could provide better liquidity for the traders. This way, it can also improve the yield for the LP. So as I show some figures and data during my presentation, that it has been really innovated, and we are also running some tests with a very renowned company called Gotlit, led by Tehran, to validate our AMM model and try to test and to prove that whether our AMM will work, and to improve the system and to manage the system risks right now. So this is the first thing that kind of differentiate our MCDEX from others because we have been spending a lot of resources on the capital efficiency. And the second thing I think I will highlight is about market diversification, which I have talked about. That we believe permissionless creation of market is quite important, and we have been working with several projects that they have great interest to create their own token as a collateral or as or create their own token perpetual market, which is some scenarios that we can build. We can build the long tail market. Yeah, that's it.
Awesome. One of the other questions here is about interest in the trade mining program that you shared some details in. Could you share more information about how users can participate in the trade mining program, as well as when is the start and finish period, and other relevant details about it?
Yeah, great. Thank you. So the first epoch actually has started on October the 4th, and it will last for 14 days. And of course, there will be more epochs. And for the first epoch that we have in total, 100K MCB as reward. With the current market price, it means about like $4 million, which is a lot, yeah, in 14 days. So for whoever wanna join this game or this game, there are basically, like I mentioned, that there are 3 criteria if you wanna gain the reward. The first one is to trade, which means that you will pay the transaction fee, and the second one is that you need to hold some open interest, or you need to hold the position for a while, and the third one is that you need to stake some MCB. Something that I want to mention is that staking MCB is not a prominent feature in these 3 criteria, so we are paying more attention to those who want to trade. So yeah, if you are interested, just go to mcdex.io and make some trade and stake some MCB, and then you are in.
Awesome. Last question is, where is the best place for users and followers to keep up to date with the latest developments on MCDEX?
Oh, right. Yeah. So the main channel will be Twitter. Just search MCDEX. You will see it. And our community is both on Telegram and Discord. You can also search MCDEX and on both Telegram and Discord. We have a huge community already, and welcome to join the MCDEX family.
Jean, thank you so much for joining us. This was really awesome sharing.
Yeah, thank you, Sammy. Thank you, everyone.
That was fascinating. So next up, we're going to be joined by Lei from Kind Protocol. Hey, Lei, how are you? You're on mute.
Oh, am I? Sorry, my mistake.
No,
great
I'm
good.
Have you with us. We'd
How
love
are you,
to hear
Sammy?
more about. I'm doing well. We'd love to hear more about yourself, and also very keen to hear more about Kind Protocol and all of the great innovation and work that your team is working on.
Sure. Yeah, just a little bit about myself. Give me 1 second. Let me start sharing. Yeah, I started my career back in banks, back in London, hedge fund and investment banks like Merrill Lynch, HSBC, Standard Chartered Bank, and then joined Huobi as a head of institution. I was also the CEO of Huobi Singapore and Huobi London. Yeah, so by the end of last year, me and my team, we came out to build Kind, and yeah, I'll start introducing the project. Okay.
Could I just ask you click on
yeah.
the full screen for this?
Oh, yeah. Yes. Cool.
Yeah, perfect. Thank you.
Yeah, right. So yeah, I'll start with a few project highlights. So the key feature of Kind protocol is it offers firstly it offers infinite liquidity for traders. So trader can trade most of the mainstream asset with zero slippage and up to 125 times leverage. I think that's pretty outstanding compared to most of the DeFi derivative protocols. And also the multi-asset exposure basically ensures anything can be traded on Kind. So that not just including the crypto asset, also including the traditional assets like stock index, single stocks, commodity like gold and silver, and also the FX trading pairs, right? And the cross margin is another key feature. It basically offers the ultimate capital utilization. So yeah, the professional traders who hedge the positions, as long as you are trading on Kind, your performance is leveled at the portfolio level, not a single asset. So as long as your total portfolio is doing well, none of your legs is going to get liquidated. And synthetic funding, I'll explain later, is quite an important point. As I go through the project, you'll get the idea, right? So what gives us these key features is the key is the peer-to-pool liquidity model. It basically gives a few things like it's index-based execution, so that offers users a real-time price index, and you can trade at any price you see without any slippage. It's not based on the order book, so the cost slippage is close to zero. So the liquidity pool is over collateralized by digital assets. So that makes sure any gain you made on Kind is fully backed on by the mainstream asset. And the peer-to-pool also provides unlimited liquidity, as I just mentioned, removing the need of order books. It might be a little bit hard to understand for for the traders who are not experienced in the traditional finance world, but in traditional finance world, this is pretty popular in the CFD trading platforms. So in most of the CFD tradings, you don't really the trading experience is much better than the all exchanges because the liquidity model is more advanced. Yeah, stakers will bear inventory risk and are rewarded by the fee incomes and the token incentives. So the Kind protocol use 70% of the fee incomes to buy back Kind token and distribute to the liquidity providers and Kind token holders. And traders, traders can enjoy the zero slippage and one-stop market exposure. These are the basic concept of peer-to-pool idea, right? So this is how it works. Basically, staker providing a liquidity pool that bet against the traders. So whatever order traders placed will be immediately executed against the pool. So if the pool the pool's performance is based on basically the pool's performance is overall the opposite of the trader performance. So if all traders makes money, that means stakers loses money, and then vice versa. So the key comes to how do we prevent staker from exposing themselves to too much exposure, right? So that goes back to the point I raised earlier called the synthetic funding mechanism. So as you know, on most of the market, traders long against the short, right? And the liquidity pool is actually only exposed to the net position. Yeah, after netting off the long and short, net position goes to stakers. In the stable market, these long and short are pretty balanced. But in the case if it's not perfectly balanced, staker may be exposed to the net position risk, right? So the way we solve the problem is to implement the idea of a synthetic funding rate. So that means if long and short are not balanced, the majority position holder will pay the minority position holder funding fee every 8 hours. The same concept as perpetual swaps. So leveraging that mechanism, now we are able to limit the net exposure to 3.47% annually. So that means stakers are pretty safe. The impairment risk is actually lower than the when you're staking on Uniswap, right? Yeah, so basically this illustrates how staking works on Kai and its architecture of the smart contract. So stakers stakes their asset and obviously receive the token reward, and also they mint KUSD. This KUSD consider for users who doesn't do trade, just simply do yield farming. You can consider it as LP token. Just keep it safe. And also for the traders, they can use the KUSD as the margin asset to trade with leverage. Any asset you want. You can trade BTC, ETH, or other mainstream crypto assets, or stock index, gold and silver positions. So yeah, anything that Kai exchange offers. And then obviously you can also exchange your KUSD into USDT or USDC, but I wouldn't recommend that because if you lose your it's like selling your LP token, and then the risk is you may not be able to reclaim your collateral asset. So just if you're not a trader, if you're just there for the farming reward, keep your KUSD in your wallet, and whenever you want to reclaim your collateral, just burn the KUSD, and then you can reclaim the asset you staked. And on the collateral asset valuation, we use Chainlink as a price oracle. So yeah, you may when your collateral asset price goes up, you can mint more KUSD to enhance your reward. Yeah, this is just some system layout of Kai protocol. So to demonstrate how we able to offer the centralized exchange level of user experience on DeFi protocol. It's too much technical detail. I'll just skip that. If you're interested later, later on, you can ask questions on that. Yeah, so basically, in this model, it's quite different from a lot of other DeFi protocols. Initially, you get a lot more. You get a high APY at the beginning, but as the TVL goes up, as time goes on, your APY reduces. But in this model, because most of the reward comes from the transaction fee. So basically, the more traders trade and contribute to the transaction fee, the more reward you get as a staker. So as the time goes on, your APY is not going down, but actually going up. So at the moment, users who staking their asset like BTC, ETH, stable coins, BNB, generally gets over 40% of the APY. And then most of them comes from the trading fee we collected from the traders. Yeah, and also the we also offer the affiliate program. So if you introduce users to join to use Kind protocol, you can get a commission from their trading fee. That's another feature. So on the project progress side, we launched the first version. We started the development back in December last year, and then we closed the first round of investment of $20 million in the first round in January, and then we launched on the on Ethereum in the end of March. In June, we launched on BSC, and in August, we besides the PC version, we have offered the phone app for iOS and Android. So just to respect the Asia users are more comfortable using their doing their trading on phone rather than on the laptop. So this is another reason why we attract so many users from Asia. And then last month we launched on Polygon. So on the upcoming development, the roadmap, we will in November we'll support the non-crypto trading pairs, like I mentioned, like SP 500, Nasdaq, FTSE, and then for the commodities, gold and silver, crude. So traditional any traditional asset you're interested, they can be listed on it. And then we are going to continue on the multi-chain implementation. So Avalanche, Heco, OKES chain, Solana, they all in the pipeline. And then we are in the progress of migrating onto high performance L2 once these L2 technologies come to the maturity, as well as right now the Kind protocol supports a linear product like perpetual swap future. Later on, we are going to launch the more type of derivatives like options, structured product, IRS. So basically moving the entire Wall Street onto DeFi world. So here's some operation highlights. Basically, we have accumulated 22 billions of dollars of trading volume in the past 6 months. And then the fee collected is 2.5 for the last 30 days is 2.3 million, and then TVL 44 million, and the highest single day trading volume is $400 million. And then we support 21 trading pairs, and our monthly active user is close to 8,000 so far. So basically, the reason we have so many users using Kind protocol compared to most of the peers is the user experience. From the feedback from users, the Kind's trading experience is pretty much beating most of the central exchange they've used in the past. And also we on the institutions give pretty good feedback on the latency side. It's millisecond level latency, and also beating most of the central exchange as well. Here's a competitive landscape. Just doing a number comparison between Kind protocol and a few other similar products. So you can see we are the amongst most, we are the closest to DYDX with second most of the number of users, and we support actually more times of leverages than any other similar product, and the fees are lower lower than any of them. That's the comparison. I won't read it out, just spend a few seconds to read the numbers. Right, okay, So the next one is our early investors. As you can see, most of the names you probably recognized. Naval Ravikant, Alex Beck is co-founder of Dragonfly. Naval Ravikant is founder of CoinList, and then previous CEO of AngelList. And then CMS, Blockchain Capital, Spartan, they're all pretty well-reputed names in the VC world. Yeah, thanks to their support for our first round of fundraising of the $20 million round. Yeah, so to find out more, here's a list of our addresses, Twitter, Telegram channels, and Discord. You can, yeah, if you're interested, please join, follow us for any future update, for any future progress and recent update. Thanks for listening. Now, if you have any questions, I'm happy to answer.
Thanks a lot, Lei, for this sharing. A couple of questions here. So there's one question about if Kind supports API trading for high-frequency trading strategies.
Yes, actually, we have a few institutions with high-frequency trading strategy trading on Kind. Their general feedback is the gains they gain much more on Kind compared to their previous trading platforms. The performance of Kind ties with the Binance exchange and beating most of the centralized exchange. The latency is a millisecond level. The slippage is much lower. So yeah, it does. And for any professional traders who used to use API to trade on platform, Kind is fully equipped to support that.
Awesome. There's another question here which is asking about how Kind architecture can keep the level of performance as trading volume keeps increasing.
Yeah, so as I mentioned earlier, the Kind is not a order book based liquidity model. So it doesn't really require a matching engine. Not like I think if you guys familiar with the centralized exchange architecture, the key bottleneck is actually at the matching engine level. So all the matching has to be done together in the memory of a large server. So upgrading that server is pretty difficult as volume grows. But on Kind, it doesn't really have the matching processes. Basically, any trade is executed against a pool. So without a matching engine, all we have to do to upgrade it is just to set up more node, because our trading engine, most of the trading engine does is bookkeeping. So that can be done simultaneously amongst the thousands of nodes. So yeah, for Kind, the upgrade the capacity is pretty simple. All we have to do is set up for a few more nodes.
Got it. Thank you, Lei, so much for joining us. Thanks for your time and appreciate this great sharing.
Thanks, Sammy, for having me.
Thanks a lot. Thanks to the audience for tuning in, and we look forward to you joining us for the future live stream events. Thanks again and have a great day. Bye.